Good afternoon. Beautiful Sunday here. Just watching a little bit of football early on. We've got Nick here joining us. How you doing, Nick?
Good afternoon. Yeah, excellent, excellent. Can't say the same for where I am. We've been absolutely atrocious, but yeah, it's good to be here.
Well, yep. Good to see you. Yeah, we watched last night. With a couple of buddies, we watched a bit of an MMA fight. It was a big upset. Noons was beaten by Penna, I'm sure, and Madavi, who's in the room trading stocks, was watching that. For the English and Australians out there, been a big week. Not so much for the English. Australia absolutely obliterating them in Ashes, which is probably the biggest sporting contest between the two countries in cricket. And on Sunday, we tend to go through and get ready for the market. We see it's constant talk about Apple. So we're going to spend some time talking about what we saw in our strategy. That was part of our strategy actually about 5 weeks ago. So we've been very fortunate. It's one of the things we trade. Nick's very, very well versed in options, being involved in it for a number of years on both sides of the desk. So we're going to move on that as well. So let's go through on what you can see here on these charts, and I'm going to quickly go through what we saw in this 6 weeks ago. So first, let me say that Apple is 11% of the Nasdaq, and it combined with another 5 stocks, which is like Tesla, Google, Microsoft, is nearly a quarter of the S&P. So it's important to know what they do. Apple's one of the heaviest traded by the interbank crowd because it's at a more reasonable price in the sense, it's 180 now, but it's generally been around 120, 150. The other big caps of those other 5 are like Tesla's $1,000. What's Google now? A couple of thousand. Amazon's a couple of
Not far
thousand.
away.
Yeah, so this is a better value. What that brings is tighter spreads, right? So you can get in that division, your position. What I like is it's very good technically. As you know, we at Traders Community, we subscribe to the Nova Wave methodology and what that brings. That's all about volume, time and price, and understanding and feeling the market, So we like that. And with that, we also like value. So value in this stock market world of today comes with cheap optionality. It's something that wasn't around for a long time, and I love it because now so many people are being more educated with risk. They're using more and more options than ever. And most of my time is spent trading the S&P contract and oil and natural gas and Apple has all those attributes. So it's a beautiful thing, and we're going to go through what we see there. So we go back about 5 minutes ago, and I had a pronounced, I would say, anti-flavor for what they call growth stocks and what we call high flyers or punts, basically. So we would get mocked a little bit. Oh, why aren't you in this? Well, it doesn't really, I've seen too many bubbles, basically. And what happens when you want to get out? So we take it, a lot of us are ex-sports pros. What makes you at that level in basically rugby, football, and the martial arts? You got to have a good defense. Same thing with stocks. So you need to know the worst case, not the best case. So button down the hatches. We took a few hits on things recommended to us that normally we don't do. So it's also good if you get outside of your lane. Usually you find out what happens. You either change, because you're always constantly learning and trading. You always got to respect the market, and you got to keep your ego in control. So all that happens. Apple. Why isn't Apple hitting 52-week highs? We go and analyze a bit. We look at the charts, which we're going to go through in a sec. But the big thing I noticed more than anything, vol was so cheap compared to anything else. Remember, that's you can go on with all the Greeks if you want, but I'll say it 100 times. A trader will look at the delta and the theta, most two important things, and think what they are, right? And then the others, the other Greeks, which we can go through later, but for this example, we're not going. There's no need to. We know basically, it's cheap. right? It's value. We look at
Exactly.
options as cheap, right, Nick? You look at them cheap or expensive.
Yep.
Um, and I have another rule we do at a bunch of us at NovaWave and at Trades Community is as soon as you buy an option, that's the most you can lose if you buy the option, not if you sell it, which is going to be relevant for what we're going about to talk about. So you also look for cheap investment, not cheap as in a punt, value. Okay, let's go over to these charts. So you can see, let's go to a weekly real quickly, just basic. These charts are from stock charts here. Then we're going to go with our own here. I just want to show you the bigger picture in simple form. Apple's was motoring up all year, but it stopped. It just wouldn't go up. But here's the other thing. The reason this part of this strategy is we know that SNB, the Norge Bank, big holders, not just BlackRock or whatever. That's important. You look at who these guys are for multiple reasons. Then we go to daily. You can see it more specifically, right? That's all this work. So our first take of it was here. So what I noticed on sell-offs, they sold down the calls. So, and I remember in the room, we said, I'm going to just accumulate optionality or calls that like 2 weeks out to a month out. Because what they do is, because so many people own Apple, then they've got lethargic or lazy in just selling calls because it was easy money. So behold, so volume's still there. The optionality is getting bigger, as we're going to show you, because guess what? These guys are trying to match the index. So if they're in Apple and not in Tesla, for argument's sake, they're not making as much money. So they tend to sell more calls, and they get lazier and lazier. Lazier as in they may buy puts to protect their VAR, etc. There's a whole list of it, but just simply, vol's coming down, a truckload of people are long Apple, and they're selling covered calls. But a lot of these guys are matching them to an index, right? Or they're matching them. Remember, Apple, meaning that Apple's in the Dow, it's in the Spurs, it's in the Nasdaq, right?
And various style factors as well.
Yeah, so you got all that, right? And then you've already got the central bank, no conspiracy here, they ain't selling it. Is the best way I can put it, right? Apple, under my thing, and when I go long term, I want companies that pay a dividend. I get mocked constantly because I constantly say, do they make money? It's all relevant, right? Remember, you're taking the football approach, the rugby approach, you want a solid defense. Okay, all that said. So we know that. I thought, wow, these calls keep getting sold down. And we looked at our charts. This was a classic pattern, right? Look where we're sitting above here. We got a nice little pennant going here. Meaning if it breaks the top, it can run. Then we look at the optionality and we say, dude, if this starts breaking levels, they're going to... So that vol has to go up. It means their delta... They have to match their delta. That's kind of the rules at a lot of these places. Meaning the delta was all the way down at 20, right? I've got 100 shares. So let's make it easy. I have 1,000 shares. The delta's 20. If I want to match the delta, I've got to sell 5 options to 1, right? So I'm short 1,000. I've sold 5,000 worth. Does that make sense, Nick? Am I explaining it well? So that happens, the price moves up. Not only is the price going up, the volatility is going up. So that 20 works its way up to 25, plus price is going up. So I've got to stay long this because I'm a fund manager or whatever. I'm not, look, some guys are just going to go short or whatever, but these guys, most of them want to stay long.
They have a mandate.
Right, to show their book. So then they have to buy more stock. Then it feeds on itself, right? So that was an easy play. So options we were paying for 9 cents because they just get sold down at say 165 when it's trading at 150. Well, actually it was 160 when it was 152, I think. I'll have to think through what the event was to knock it down that time. I think it was their earnings. Yeah, that was their earnings. And then we matched it forward 2 months later, you keep an eye on it. There's obviously some news on iPhones, etc., etc. You keep your eye on that and how the market reacts. That's all that matters. Not what some guy's theory is out there. Or what's that word I hate? Thesis. So what their
Jesus.
thesis is to make them sound good or whatever. It's what the market decides, right? It's all pricing. And that's what you are. So you take note of how they're pricing it. So what you look at on what we call gamma plays, and really what that means is cheap optionality at a risk point. So GME is the extreme example where people sold a lot of that of the premium way out of the money. Other people bought it cheaply, and then they were forced to cover, right? Because they didn't believe it. Oh, this is crap. I'm just going to sell it. And then lo and behold, what happens? Well, think of that on a different term. That's what kind of happens with Apple. And we see that more significantly in the past week. And that previous weeks is more important to understand what happened, because that happened the first time. We were able to profit on it, and then it happened again. And you're able to get what happens is the puts become cheaper relative to calls because they're trying to match their position, right? So normally there's a skew, which we cover well on the website. There's been a skew in length in stock markets, not just the S&P, but most large or at least index matching stocks since 87 because of the crash, right? And there's a lot of reasons for that. Fear of the next black swan, VAR, risk management, we can go on all day about that. But bottom line is that's what happens. So puts get cheaper, so you can also go the other way on that, but you watch what the market's doing. Because if the calls get away from them, that's what GME was in extremes, but it happens on big caps as well. And it's significant because this is happening at the end of the year. So we'll talk a little bit about that too. But I want to let's just do the technicals real quick, and I'll hand you over to Nick. So we can see what's happened there. Technically, from our Nova Wave, we were way oversold. So we were trading it from the long side anyway, the S&P and the Apple. And Apple was not performing to the S&P. That's what brought it to our attention. It's come up on all my lists. The vol's the big things. We do things a little bit different. So someone said to me, oh, yeah, well, what's the next Apple? And they're going, oh, Tesla. I said, well, they're not under our criteria because of the spreads, right, to start with. So you want to not extend yourself. You're buying an asset that's 6. I mean, I'm not giving financial advice here. We're just talking through logic. But I know that a lot of these gamma type plays are going to expire worthless. With Apple, that becomes a lower risk because it was lower vol. It doesn't have to be Apple. It's just a great example of it. And you can roll and all this sort of things. We do. And when vol goes up, if it's not a major chart point like this was, you would create spreads and you sell against it to lower your risk. And you can do the same on the bottom side for stocks. Anyway, so we had all this congestion. So we got a 240, which is 4 hours. Look what was going on. This sideways movement, literally, I mean, I hate to use the term, but they're literally giving away calls. So we lost a few times here because it didn't break up. But you're covering them with either trading or you're selling premium. If you get in early enough, and then you can, and Nick will talk a little bit about that by the spread, how you manage them as two separate issues. So then we get this first move, right? We had this move here. Does it show up on the hourly? So hourly will show what we're going to talk about on the weekend. So we get this breakup here. It's the first one. Bear with me here. Here we are.
Around the 22nd, if I'm not mistaken.
So here we are, right here. So that was our first swing. And I have a tendency to get out of things. I'm pretty conservative. And I'm not of that school at, hey, I'm up this, I'm going to let it ride. I'm up here, I'm considering that as money, right? So I tend to get out a little bit earlier. So we look at all these, and you can see how it fit into Murray math. Remember, so we're already oversold, And even now, we're still not at plus 1/8 on the 4. And this is a recount. This was plus 2/8 before the recalculation. And we had this perfect pennant, right? See all this? That was for the second one. Same pattern was here. And go back, and my theory was that all these blokes and part of the strategy are selling. And then they become lazy. And what happens is you see this, if we're in the oil world and natural gas world, people do what they call it like the Texas hedge and stuff like this, where they stop covering themselves. So if I'm short and I don't own the stock, they don't have, so they sell vol, they're short optionality with nothing above it. So that starts to happen. And you can pick all that up in your options. So this all happens, we get out, we do this trade. But the real beauty was this one, right? And we all know this, if you've been following us in our morning calls and what's on the website, on a big thing we watch is crowd behavior, right? And so we watch things, divergences, like straight out just old school divergence, price versus indicator. Where we are on Murray Math over sold bought, which I think we're all familiar with now. And then we combine, I had a great question earlier on Twitter, why do you look at Ichimoku, everything else from Friday's one? So it's all combines, because if you start to learn Ichimoku, it's not about tanking and bloody cage, and I'll tell you right now, it's how it all reacts. So you got to learn it. It's an art, not a science, right? And the man, forgive me, but I can't remember after the Second World War, who was a student, obviously, of Gan and also over there in Japan. What am I thinking of, Nick? What's the big Japanese charts? Candlesticks. That's what I'm looking for. So it's very much sensing what it is, and that's where you bring in your Elliott wave. So that became the wave. So you see the ABCs. Remember, that's what we buy off. Well, the greatest one was this one. This sell here. So it's gone up to 170. You've had everyone cover, buy back, what I call chasing the gamma, chasing the delta. But it's chasing the delta is what I will call it. And they're trying to match it all the way up. They get sated, and guess what? 170, that was an all-time high. It sells off to 75, right? 70 to 65. So that was a pretty easy trade. That was 8/8 on the day in the shorter term. Different things. It got over the Chico. Anyway, comes back here. The market goes home squared along. Overnight, Apple was having problems meeting because we'd gone on so long with the chip crisis that demand was changing. A lot of Apple buyers are a little bit coldish, but they were like, dang, the next one's out in 3 months now instead of 6 months. And so there was already a problem of getting chips, right? And Apple had said that, Cook had said that at his last earnings, I think 2 billion or something, wasn't it, Nick? It was some huge number. Anyway, that's out there. Bloomberg reports on it. Boom, down $5. Gaps down. Perfect ABC. Optionality, all this what we saw here, vol collapsed again. We have a perfect ABC. So we buy, that was the first trade, right? And then the next trade, you had the new variant and Thanksgiving, you saw on oil, etc. So we come down here. Guess what? We don't go as low. Think about your divergence, right? And as Nick will go through what happened on puts, this comes even more clearer. So then that shaped up on that Friday where the selling was happening. First thing I noticed near the end, if you can call, and I think Madavi goes through it, is that we started to get a lot of divergence in the S&P. And he trades the Nasdaq. I don't trade that, but S&P. So we got long through there. Everything was telling us it's overdone. The psychology, the DIX index was at a much lower level than any of these kind of declines. So all the things we kind of look at. So when I trade, I have all the options. I trade in a market maker box, not just some. So I want to see what the market makers are doing, how the machines are trading. big thing I noticed, right as SPOO started to go up that last time, in the last 15 minutes, vol collapsed. The beautiful thing in the box, then people, they're just desperate to sell, right? So they don't pay hand of the money value of it. So we were able to do a strip at a really cheap price. So 62.50, 62.50, 65, 70. We were able to buy all that for naught, not naught, but you know what I mean, value. Come Monday, it bounced more than what we thought. Because we got it so cheap, and it is options, we take a lot of profit early on Monday. It comes down. We rolled some forward to keep you in it, because the trend's still working, but we took off the risk, right? So you made $2 here, you used 50 cents, so we rolled up to 75, etc., right? Now, Johnny Hindsight would say, dang, Andrew, everyone knew Apple was going up. Really? Secondly, why didn't you stay in it all? I just addressed that. You never know what's going to happen, right? And so that moves on. So that's the technical look and kind of the theories. I'm now going to bring up, I may be able to trade, but sometimes I'm not very good on a mouse. I'm going to bring up Nick's pay. Where is it? Where to go?
Yeah, so just very briefly, I think we'll touch on sort of the ball aspect.
Let me bring
when we get it up.
Where is it? Oh, there it is. That's not it. So I just got to drag this over. That's your page.
Yeah, you just make it.
Right. So let Nick's going to go through this now. There you go. Perfect.
Yeah. So just going back to this. Yeah. So this was fascinating. We've seen this, of course, in other stocks, Tesla, Nvidia, but it was very interesting seeing this in Apple. So this is the last month, and obviously we have the actual price movements at the top. What's interesting and what I draw your attention to is in the second box is just the option volume, calls and puts. Obviously, you see the explosions on the run up, call it around, in the beginning of that first run up, it peaks a bit. And then as we have that sell off on, and I believe that was on the article with sort of unsubstantiated news. You see volumes collapse, and then as soon as it starts rising again, the FOMO kicks in, and the last 2 weeks has just been incessant buying.
Right. From
more interesting than that.
This was at first. This is what confirms our theory, I think, that these two here, and so this is. So you can argue it. Part of it's speculators, right, which is what we are, but a lot of this is forced buying.
Exactly.
So I think covering their calls that they're sold.
Yeah. So covered calls are generally a prudent strategy. And as Andrew said, it's what could be safer than an Apple, right? If you're doing this long term, but that worked against people, obviously, in this case. So I think there were two things that happened, and especially if we look at the third chart, so the penultimate chart there. So that's the skew. Right. So you see a very interesting effect here. So it's kind of puts are as usual more expensive than calls on a relative basis. But what you see is maybe around the kind of near the end of November. You see that first run up, and then the skew sort of inverts. So calls become relatively cheaper. The skew was still positive, but compared to its historical average.
Just bring that over so you can see it. There you go.
Yeah, perfect.
Yeah.
But the more interesting thing, I think, is once we had that bad news out, so this is near the end of the chart there, you see that big hump in the skew. So this is, puts quite obviously much more expensive than calls on a relative basis.
Gap down on the shortage of of supplies.
Yeah, exactly.
And then as you read through it, it got it down, but the market was basically already caught, So it gapped down, but it didn't stay down. It's the nicest way to put it, yeah.
Exactly. And as usually happens in most cases, is that people buy protection at the worst possible time. So all of that put buying, as it gapped down and sort of that day or two afterwards. Exactly. You can see the skew just remained elevated for a few days. You also see it just in the vol in general. So on the bottom, we have, I think, 30-day call and puts IV. And I mean, they both spike. And again, so buying protection at the worst possible time, so to speak. And what do we see after that? So once the market as a whole,
right? Yeah.
exactly, and once the market starts rebounding, and people realize that the news wasn't that bad, talking about Apple specifically, those puts suddenly become a lot less. They're worth a lot less. Market makers need to unwind some of the short hedges, so that plays into it. You have, of course, the huge amounts of call buying, as you can see in the second row, so to speak, there. So this all plays together. I mean, the decaying and the I don't want to say devaluation, the decrease in value of the puts means market makers need to unwind, some of the short hedges. Potentially, people who just put on puts, out of fear, they just take them off anyway. So that adds more to the upward pressure. And ultimately what we saw, and it was quite fascinating. So that hump in the skew, it just falls. Well, I don't want to say it falls off a cliff, but it decreases quite substantially. Call it right after that route was finished, so maybe around the 6th or so of December. It's a bit hard to tell, but you see the skew fall off. Calls become suddenly more expensive on a relative basis. And you see, you can see the call volumes as well in the chart above it. Call volumes also pick up, and I mean, this is a loop that just keeps going, and call it a gamma squeeze. It'll be interesting to see where this goes, because as the stock goes up and calls become, more and more people pile in. I mean, the market makers vol is going to go up, and it has been going up.
It has been going up, which
in big time,
yeah, but it's still relatively cheap. So here's a good. So when we talked about the theory strategy, this is what we noticed. Now, we don't have it up. I mean, I could put the others up here, Amazon, etc. But Tesla in the video. They're dramatically higher, right? So that's what made this come to our attention, and it wasn't going to 52-week highs. Well, systematically, the market had been doing that, right? They were trying to keep, basically not trying in any bad sense of the word, but the market looks to try and get the next high, just everyone collectively. Remember, the market's just a collective group of humans. You could argue, but even computers are run by it. So then we get up all the way to here, and that was, so you had the fear here of what do you call it? That Bloomberg article we talked about.
Yeah.
And then you had the variant, and there was something else. Oh, and the other thing, of course, was we had Powell and Yellen up before Congress, or the Senate, sorry, just after the Fed. So you had all these things taper. And the taper thing's like nonsense. The way it's not nonsense, but the reaction and the understanding of it. They're still going to buy a lot of paper, right? There's still liquidity. Interest rates are negligible. And we know that and inflation's through the roof. I mean, what was it, 6.8 on Friday? So there's all these other factors out there which the market's choosing to ignore. Yet they're worried about tapering. So people have just, it's like it's like the theory of flexibility. Price is just trading off price, and humans are trading off. They don't even know what they're doing at this point. And there's a lot of people caught way up to value. Like, everyone blames Apple on this. Oh, that was BS, that article on Bloomberg. How many times do we hear it? And somehow it's Apple's fault for everything. So what happens is other people, you think about the puts here. These are people that, in this one, at Chase Delta, got bloody long again, probably matched it. It gaps down. They got to do the opposite, right? Puts are more expensive. But look at the divergence. So always have a game plan. That's why I wanted to bring this out. And we're not being great Australian term. We're not being wankers, right? This is a plan you have weeks ago. You're not chasing it. You're not chasing the dragon, which is what all happens. They always jump on it about here. You have a plan. Yes, we tend to get out too early. That is a weakness of us. We're a little bit on that, but
But it's also prudent risk management,
right,
frankly.
right. So live to fight another game, so to speak. But that feeds on itself. And what Nick's saying here, it's like these are great tools visually. I'm a very visual person. That's why we like the Murray and the Ichimoku, bright colors, I guess, right? But you can see what's before you, and if you can watch, like Madavi's one of the best readers of a market maker box I've seen on stocks. So you don't really get to do that in the futures. You used to when you're on the floor, but you do see it in the options. You do see it, right? And the depth on Apple is massive, thousands by thousands, right? And that's the other key is you got to be trading the right option. It's not necessarily the one you want to be in. It's where the market makers are. So if you're wrong or right, you can get out, and you want to know which spread you can go to, which put you're trading, which call.
Yeah.
Put all that together, right? And have a strategy.
I mean, Apple is essentially probably the only competitor to the SPY in terms of just liquidity and spreads on the options. So I think it's a great underlying, frankly.
Yeah, I can't find another. So $100 stock, so that gives you a little, $2-3 range. That's great for trading. That has this kind of volatility and has this tightness. The problems with the testers of the world, the vol's so high and the spreads are high. Remember, I'm a market maker, say. I don't want to give you a 2-cent spread when I can get run over for 50 cents like that, right? So I always find it interesting. People complain about an options price. I go, well, what's the underlying? Well, there's your minimum spread right there, right? Less the delta if you want to really get fancy on it. But yeah, so hopefully that helped everyone. As far as where does it go now? Well, we're obviously in an impulse wave. We're due for a correction. A lot of what goes on in this market right now, we are December. We're American. Christmas is a big deal, right? Big part of the market, one hand, in England, Australia, America. So a lot of people are off the desk, families, Christmas parties. Well, I guess they're not having them in England. I just see they're having another lockdown there. But
Yeah.
jokes aside, it is also our tax year. So I know Australia's June. America is December. So you want to get rid of your loss-making stocks, right? So that's what hit a lot of the Russell-type stocks, the high flyer, the real punter, ones that don't make money that were probably worth 10, went to $300, that sort of thing. So as they start to sell, and a lot of people have been buying the dip, so they're taking losses there. The flip side of that is they probably don't want to sell their Apple if they don't have to because of the tax element. Now, I hate to say this, but it's true. A lot of bankers, they want to get their biggest bonus, right? So they call it like painting the tape, right? Window dressing. So the higher it goes, obviously the bigger bonus, but they got to sell. In most cases, you got to sell it. You don't make a profit until it's crystallized. So you got that going up. So at what point does that happen? So keep a look at your stock, your charts. What's the underlying, i.e. Apple? Watch what's going on under the surface with the options and your other events. We have some big events coming up. We're going to talk about this separately on a different one. So be aware what's coming out. This week you got all this event risk in Asia. You've obviously the global risk, it seems to be they're trying to pick a fight with Russia, the US, Ukraine, all that. You got a ton of numbers. You got the Fed guy. You got the Fed, of course. Big stuff. How hard is he going to go on inflation? You got all the PMI numbers coming out, right? So there's quite a bit of event risk. So don't assume, like the herd, things can only go up or only go down. And what happens to a lamb, unfortunately?
Exactly.
Right. So,
I think
hopefully that fills it in anything. And thanks, Nick, for your wonderful insight and these tools you've brought to the table. Excellent.
Yeah,
Excellent
absolutely.
stuff.
I think just this is a market where bulls get their heads torn off, bears get their heads torn off. So I think what Andrew says with having a plan is just all the more important. It's always important, but especially in these times.
Yeah, and people talk about having an edge. Well, it's pretty hard having an edge against computers and seasoned veterans, and on top of that, all the risks that can broadside you, like the overnight news and all this sort of thing, or big order flows coming through for tax reasons. A lot of what you're seeing selling is purely because of that. And I know, so that makes it more of a challenge, but it also makes it real, right? So, hope that helped. If you like what we're doing, be sure to subscribe. We do try and do it live, pre-market, and if we see something like on Friday, if it really sets up and it can be valuable to help show some technical analysis, at least what we're looking for. And remember, there's always two sides to every coin. There's a bull and bear theory, so know what it means, the bullish and the bearish, right? Don't put everything on green, so to speak, or all on red, right?
Mm.
Yeah, and so understand the purpose of Traders Community a long time ago was to help share and educate and kind of share what moves markets, or what are the factors are. So anyway, you can follow us on Twitter, Traders.com. Specifically, you can follow the technical analysis over there at NovaWave. Follow Nick on Twitter, and we'll put all those in the bio there. Enjoy the rest of your weekend. Enjoy it with your family. Get ready for tomorrow. You're probably out doing your Christmas shopping, and we will see you tomorrow. And we will, if time permits, get out with our usual pre-market right up. There is on the website the market talk. That's all there of what's out, all the different charts of Forex and stocks and whatnot. Okay, bye now.